Buying versus leasing commercial property in Katy, and which strategy makes the most sense? So, for a growing business, one of the biggest real estate decisions is whether to buy or lease commercial property in Katy, Texas. And buying can provide equity and control and potential appreciation, but also long term wealth creation. Whereas leasing can preserve capital and provide flexibility and allow a business to occupy a location that might otherwise require a significant upfront investment. And neither strategy is automatically better. And the right decision depends on your business model and your cash flow and your expected growth, but also financing options and location requirements and how long you expect to occupy the property. And with Katy continuing to grow, the decision can be especially important. And the U.S. Census Bureau estimates the city of Katy reached approximately 28,373 residents in 25, representing 29%, 7% growth from its 2020 population base. And median household income for 2020 to 24 was roughly about 115. And the combination of population growth and purchasing power continues to making the broader Katy area attractive to both business and commercial real estate investors. So why businesses choose to buy commercial property? So for established companies with predictable space requirements, buying commercial real estate can turn an occupancy expense into a long-term asset. Instead of making payments to a landlord, your business makes payments towards a property that it owns. And you can build equity is the biggest benefit. And that's really the most obvious advantage is the equity that will grow. And every loan principal payment reduces your amount owed, and the business or related real estate holding company can actually accumulate ownership in the property. And as well, the real estate appreciates over time, so ownership can create another source of wealth beyond the operating business itself. Two is you can gain greater control. And commercial tenants typically need landlord approval for significant modifications. And owners have considerably more control over their properties, subject to zoning and deed restrictions and permitting, but also lender requirements and association restrictions and any applicable laws. So that can be especially valuable for businesses that require specialized improvements like, say, a medical or dental practice, or a warehouse and their shelving systems, or contractors and trade businesses, or a manufacturing operation, or an automotive business, or a professional office, or a showroom, or a specialty retail. Three is potential tax benefits, and commercial property ownership may provide depreciation and interest deductions and other potential tax benefits depending on the ownership structure and current tax law. And some owners may also investigate cost segregation strategies to accelerate portions of the depreciation to improve their cash flow in the early years. And tax consequences are highly situation specific, so these strategies should always be evaluated with a qualified CPA or tax advisor. You create an additional investment asset. So a business owner can potentially separate the operating company from the real estate itself. For example, a separate entity might own the building while the operating company leases space from that holding company. And eventually, the owner could sell the business while retaining the commercial property and collecting rent. And that really depends on how the transaction's structured, but that is a general way that we see these playing out. Five is potential appreciation. And commercial real estate ownership also provides exposure to potential property appreciation. And there is never a guarantee that values will increase, but acquiring a well-located property in a growing market can create significant long-term upside. So let's talk about why leasing commercial property could be the better decision for your business. And ownership does have substantial benefits, but leasing should not be viewed as simply just throwing money away. And for many companies, leasing is the more financially efficient strategy for them. And here's a few reasons why. One is you preserve working capital. So buying usually requires significantly more upfront capital to be invested as compared to leasing for your down payment. And that money might be better served generating higher returns when invested in your employees and in your equipment and in your inventory and technology or marketing or expansion needs. And the question isn't simply whether you can afford to buy, it's also where will your next dollar of capital generate the highest return for your business? Two, you can maintain flexibility. And a rapidly growing company may not know how much space it will need 5 years from now. So buying a 5,000 square foot building today could become a problem if the company's going to need 12,000 square feet 3 years later. And leasing can provide greater flexibility to both expand and to relocate or even to enter a different submarket. Three, access to better locations. And some of Katy's strongest retail and office and mixed use locations may have considerably more leasing inventory than owner user opportunities. And if visibility and demographics and traffic counts and signage or proximity to your customers is really what's driving your revenue, then leasing the best location may outperform owning a less desirable property. Four is you can reduce property management responsibilities. And ownership comes with additional responsibilities, no shocker there. And depending on the property, those could include roof maintenance and HVAC systems and parking lots, but also insurance and taxes and any structural repairs and landscaping and capital improvements, but also property management itself. And a lease may shift some of those responsibilities to the landlord. Now, although this varies significantly by lease structure, that's kind of the general case. So buying versus leasing, the financial analysis. And the mistake is only comparing the mortgage payment to the advertised rent payment. And a proper buy versus lease analysis should evaluate the total economic cost of each alternative. And we can help you build a spreadsheet that will analyze this. But say for ownership, consider your acquisition price and your down payment and your loan payments and your closing costs and your property taxes, your insurance, repair reserves, and improvements, and also the opportunity cost of invested equity and potential appreciation with potential reductions and disposition costs. And for leasing, we're going to evaluate the base rent and your CAM and any rent increases and tenant improvements and moving expenses and your security deposits and your renewal risk and the opportunity cost or return generated by capital that could be invested elsewhere. And this is where professional commercial real estate and financial analysis becomes particularly valuable. So what about SBA financing? And owner-occupied commercial real estate buyers may have financing options that significantly change the buy versus lease calculation. And programs such as SBA 7A and SBA 504 financing can potentially reduce the amount of equity required compared with some traditional conventional commercial real estate loans, obviously subject to eligibility and lender underwriting. And conventional bank and credit union and other commercial financing structures may also be available to you. So before deciding that purchasing is too expensive, business owners should also understand that the financing structures which could help them qualify. So let's talk about when buying may make more sense. And buying tends to become more attractive when you're going to expect to remain in your location long term. And your business is stabilized and your cash flow is consistent. And your space requirements are relatively predictable. And you want control over the property and modifications. And if suitable properties are actually available for purchase. And if you have sufficient liquidity after closing. And ownership fits your long-term wealth strategy. But also available financing is going to produce acceptable economics. So when leasing may make more sense. And leasing may be preferable when your company is in growing rapidly or rapid growth mode. And future space requirements are just uncertain. And location is more important than the ownership. Or if you want to preserve capital. Or if you need to occupy quickly. And suitable owner-user properties are scarce. And you don't want property management responsibilities. or your operating business can generate a higher return on capital than owning the real estate would for you. A third strategy: buy more space than you actually need. And there is another strategy worth considering. And a business that needs 5,000 square feet might purchase a 10,000 square foot building and occupy the half that they need now and lease the remaining space to another tenant. And that tenant's rent can help offset the property expenses and debt service, while the owner retains the additional space they need for a future expansion after that lease expires. And this approach introduces investment property and landlord considerations. However, so the property and the financing and the leases and the cash flow all really need to be carefully underwritten before proceeding. But it makes sense if you can remove some of that cost. So the most important question is, and you shouldn't really begin with, is buying better than leasing? Instead, I would suggest that you ask, which option creates the strongest combination of operational flexibility and cash flow, but is also best for risk management and long-term wealth for the business itself? And that question leads to a much better commercial real estate decision with a truer holistic view. So buying or leasing commercial property in Katy. Well, the Katy commercial real estate market offers opportunities across office and retail and industrial and flex and medical and land and owner-occupied properties. So before signing a lease or purchasing a building, let's compare both strategies. And a good analysis should incorporate the property and the financing and the occupancy costs and business growth assumptions and your exit strategy, but also the opportunity cost of your capital. And the Viking Enterprise Team at eXp Commercial helps business owners and investors evaluate commercial real estate opportunities throughout Katy and West Houston and the greater Houston area. And if you're considering buying or leasing commercial property in Katy, well, I'm your guy, and I can help you evaluate both options before you commit to one. My name is Bill Rapp. I'm a CCIM and the broker for the eXp Commercial Viking Enterprise Team. Thank you for watching. You can visit my website, HoustonRealEstateBrokerage.com. You have a good day.